Good evening, everyone. It's me, Siddharth Pandey.
It's me, Sanjay Adhikari.
Hi everyone, it's Mr. Rajnipal.
Hi, and my name is Tasi, and
Today we're gonna discuss about the ethical and corporate governance issue on OneTel. Let's introduce about the OneTel. OneTel is founded in 1995 by Joe Rich and Mark Silverman, established on OneTel, which soon become a major in Australia telecommunications sector. At first, the company stood out because of its strong marketing and competitive mobile and broadband services, but by 2001, OneTel went bankrupt and owed more than 600 million. The company problems were caused by unethical accounting, as you can see, mainly due to aggressive ways of reporting revenue and problems with corporate governance. And another factor is to understand how accounting ethics, governance systems, and financial transparency affect business. This case study is very important. And another fact is the bankruptcy of OneTel caused major problems of its stakeholders and also for the Australian economy as a whole. The story of OneTel reveals how making wrong ethical choices can cause a company to fail and make people lose trust in it. And the another part, my colleague gonna discuss.
Alright, thank you, Siddharth. So we're going to talk about the overview of OneTel's rise over the years. In the late 1990s, OneTel grew quickly by planning to expand and offering competitive prices in the mobile and broadband sector. Its aggressive strategy allowed it to grow the market and become well recognized. People consider the company's founders to be creative entrepreneurs who were shaking up the telecom industry in Australia. So if we go through the third ones, it says like nevertheless the fast growth brought problems and the need to keep the company moving forward caused some employees to make unethical choices in financial reporting. At last, when OneTel expanded, it had trouble handling its resources well and used exaggerated financial reports to make it look profitable. As a result, the company faced serious financial problems that will cause it to collapse in 2001. Can you go through the next slide, please? So, the next one is accounting irregularities. The main reason for OneTel financial problem was its strong approach to recognizing revenue. Even before, the service were given, but the company recognized the revenue from long-term contracts. This early recognition made the company's revenue numbers appear higher than they truly were, making people think OneTel was profitable and healthy.
Yeah.
So, the revenue can only be recognized is earned according to standard like the IFRS and Australian accounting standard. As a result of violating this standard, OneTel couldn't fool investors, creditor, and regulator about its real financial condition. So, thanks to these tricks, the company will still function as if it was making a profit. But when the truth was revealed, it caused the company to become unstable financially. Can you go on to slide, please? Thank you. Ethical issues in revenge recognition. So, aggressive revenue recognition was against the rule of accounting and also unethical. OneTel decisions were considered unethical from a deontological standpoint since they went against the main principles of honesty and fairness. When the company counted revenue before it was earned, it gave stakeholders wrong information and prevented them from making good decisions. Virtue ethics will claim that OneTel did not act ethically because to be ethical, a business must be open and committed to its long-term goals rather than just seeking short-term benefits.
as you can see, the main issue was like changing the ownership structure, social responsibility,
Yeah.
scams, and corporate oligarchy, and the globalization.
They have the correlation between.
Yeah, and the
all of
next
them.
next slides. Can you please keep the next slide, and we're gonna mention again.
Alright, so the next one is corporate governance failures. So the failures are mentioned here. The failure of OneTel was made worse by the company's poor corporate governance. The board and senior management, they didn't meet their duty to make sure the company followed proper financial and ethical rules. Corporate governance works best when there is a system in place to keep management from doing anything unreal. If we go through the next one, nonetheless, because there was not enough safeguard in place at OneTel, the company management could adjust their financial report as they saw fit. And it shows that the company's leaders made bad choices and put more importance on quick profits than on acting ethically and ensuring the company lasted. So if you see the diagram, there's a corporate governance in the middle, and as we can see the factor, the relationship that may affect the corporate or government failure.
All right, can you please move to the next slide? Yes.
So the next one is board's lack of oversight. So the board did not stop management from engaging in unethical behavior. It is the board's job to make sure that financial reports are correct, open, and company with account and guidance. Still, the board of Wantel did not challenge the company's aggressive accounting methods and did not hold management for responsible for their actions. Because there was no proper oversight, the company's financial statement remained inaccurate, and the board did little to stop the company's wrongdoing. So, at last, it would have been better for governance to challenge the ways revenue was recognized and to make sure auditors review the financial statement without any conflict of interest.
That's the main
All right.
concern.
Yep. Thank you.
Have
All right, I'm gonna pass it to my friend Tasi for another slide.
Yes,
Tasi,
thank you
go
very
ahead.
much. So now we are going to talk about ethical principle in governance. So as we can see also there is a chart to elaborate more clearly. So corporate governance. So there is a relations like let's say start from the policy and procedures, transparency, and the board and the committees, legal, regulatory, and systems. The most important that every business should follow, and then the hierarchy and the internal controls. So there are few points that I can discuss today. So when it comes to the ethical governance, the board of Wantel did not act according to the main principle of the accountability. So accountability has to be go through the integrity and responsibility. Companies must be open about their finances and give accurate information to all interested parties, like their stakeholders and their partners. And the management and the board of the Wantel broke this principle when they mispresent the company's finances to make it look more profitable, which is bad actually. And when the board fails to meet its responsibilities, it proves that ethical leadership is necessary for companies to follow proper governance practices. And the board's mistakes were the main reason for the company's failure and for trust in the industry to fail. So that's all about the ethical principle. Can we move into the next slide, please? So impact on stakeholders. So the major concerns because of the stakeholders, they are really unhappy with this. So there are a few points that I can discuss. So the wrongdoings at Wantel brought major harm to its stakeholders. A lot of investors lost their money due to the company's bankruptcy, as its stock dropped sharply, and many creditors did not receive their money, and a lot of small businesses experienced serious financial problems. Those who worked for the company for many years lost their jobs and had trouble finding other work.
Yeah.
The events Wantel collapse caused people to doubt the company and its industry, which made them more suspicious of Australian corporations after the scandals. So now we head into the implications for financial reporting standards. The fail of Wantel revealed that there are problems with Australia's rules for corporate governance and financial reporting. There are the Australian Securities and Investment Commission, ASIC obviously, and the Australian Stock Exchange, ASX, made the changes to improve corporate governance and financial transparency. The main goal of these reforms was to increase supervision over financial reporting and encourage ethical decisions from top managers. Among the reforms were tougher rules for auditing, strict guidelines for recognizing income, and actions to guarantee that companies kept their audit work separated. Because of this incident, it became clear that financial reporting rules should be made stricter and must be followed very strictly. So rule of the auditors and accountability. So we have a chart here about the ethics. So ethics comes with rule of conduct, rule and regulations, values, ethical practices, research obviously,
Yeah.
and what is this?
Principles.
Principles actually, yes, and
Moral principles.
better corporate governance,
Yeah.
ensuring business ethics. It is the auditor's jobs to verify that the financial reports are accurate and honest. The external auditors did not notice or question the company's aggressive ways of recognizing revenue. Because of this failure, people are questioning how well audits are done and the role of auditors in promoting ethics in business. it was the auditor's responsibility to give an objective and independent view of the company's finances, but they either overlooked serious issues or did not respond to them. It points out that we should make auditors more accountable and introduce stronger rules to guarantee audits are done properly and without the bias. Yeah.
Bias, yeah.
Now the next slide is gonna present by my friend colleague. So
Thank you so much, Tasik, for explaining the earlier slides. Now we're going to talk about the regulatory reforms post-Montel. After the scandal, Australia introduced new rules to stop similar corporate governance problems. Another point is the ASX corporate governance principles and recommendations were introduced to ensure greater openness, responsibility, and independent monitoring of financial reporting. As a result of these reforms, audit committees had more authority and companies were required to give out more detailed financial information. And the last thing is the main aim was to build trust among investors and make sure that the companies are followed higher ethical and management standards. It's all about the purpose of these changes was to strengthen the system and stop unethical accounting. Can you please go in the next slides? In the next slides is about the broader economic impacts. As you can see in the picture, how it impacts in the business ethics, behaviors, visions, leaderships, connections, fairness, respect, and everything. Let's talk about the first point, the bankruptcy of Montel affected by the Australian economy as a whole. And the next point is the collapse made investors doubtful mainly in the telecommunications sector, which had been rapidly growing. After the scandal, there was a drop in investment in Australia's company, mostly in the industry considered risky. As you know, because of the on-tail financial misreporting, people began to question the country regulatory system, which led to a review of business activities. At first, the economy saw less foreign investment and a slower approach to business in the telecommunications.
Alright, just to add on that, I'm gonna explain the business ethics.
Yeah.
If you don't mind. So, in business, like there should be ethics everywhere, right? Ethics should be everywhere, and everyone should be follow the ethics. As we can see, behavior. You gotta behave nice to your colleagues and everything, and fairness. Everything should be fair. Respect.
Business, yeah.
Yep, exactly. So respect. You gotta give respect and take respect in the returns. Leadership is the most important things.
Yeah, in the company
yeah,
you should have to hire
Exactly.
have to make the leaders to
Yeah, quality and vision. You got to have vision for the future, whatever the company is moving forward.
And vision for getting the
and
profit,
connection.
yeah.
You
But
got to
being
have connection with the other
Always
links.
like other communicators as well.
Thanks, Sulak.
connection. Yes.
Let's talk about the lesson learned and recommendation. The case of Montel is a useful example for business to learn, not only for this business, we can learn they can learn from the all the businesses as well. It clearly shows that the ethical choices are essential in running a company. It's very important. And the important thing for companies to be clear and responsible in their financial reporting, sticking to the set accounting standards. Another thing is having independent audit committees and alert board is important to ensure that unethical acts are prevented. Regulators should keep up with strict rules to guarantee companies continue to act ethically and responsibly. Using these principles, business decrease the risk of repeating ethical issues and encourage trust from their stakeholders.
So there is trust we have.
Yeah.
We have to have, and with the principle is the most important, and reliability, of course, and
Responsibility
we have to
behaviors.
have to towards the works that we are doing as an accountant, and then responsibility, of course, following the regulations.
And we have a good relationship between the co-workers as well.
And choices always
Yeah.
to make the right and profitable by following the regulations
Yeah.
and morality, of course, and
That's
then
why it matters to move forward.
yeah.
Alright.
Okay.
Conclusion, yeah.
To conclusion, my friend Sanjay gonna explain it.
Yes,
Go ahead.
thank you. It's a conclusion. The failure of One-Tail highlights the importance of the being ethical in
Council,
accounting and
corporate
government
Yes.
because of the aggressive way of for recognize, receive and put governments. the company collapsed and caused major problems for the stakeholder and Australian economy. When we analyze the ethical side of the things, we see how unethical financial acts can cause major harm. As a result of one tale, it is clear that better governments, ethical behavior, and state financial reporting are needed to sustain companies. Companies are look after everyone involved.
Yeah, as a conclusion, we can see like if we have to make the company in a greater place, we have to follow the like ethical behaviors, strict financial reporting. We have to we have to make a financial report in every year, every ending year, so that the company can sustain and look after everyone involved.
And the main reason of this one-tail company collapsing was because they did the unethical thing in accounting, just to get more profit and to show that their stakeholders are investing in a right company by showing the false amount that they have, but actually they don't have in their bank, and that's why they went bankruptcy, and at the end they did the liquidations.
And the aggressive way
And the poor
Yeah.
governments as well.
So that's the conclusion, and
And
then
just to add on that, like there should be a transparent in every sector, you know, there
Yeah.
should be a transparent of
not just
everything's
in
going
accounting.
on.
Yeah.
Yeah.
So that's why it matters to succeed in the future.
Yes.
Alright.
Thank you very much.
That was
Thank
it
you
for today.
Thank you so much.
Thank you. Hopefully.